This is Insight. I'm Paul Allen in Sydney. Japan is our focus today, with reports just breaking that Prime Minister Shigeru Ishiba will announce his resignation by the end of August. And that is after his ruling party lost its upper house majority in Sunday's election. And that bombshell coming just hours after his government struck a surprise trade deal with the US for a 15% tariff rate in return for opening markets up to American cars and agriculture.
I just signed the largest trade deal in history. I think maybe the largest deal in history with Japan. We worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that.
Well, let's get straight to Tokyo and Bloomberg's the Asia Trade co-anchor Sherry An. Sherry, a number of reports now coming through from local media, differing in the details, but all the same basic theme that the era of Shigeru Ishiba appears to be over. What more do we know?
Yeah, we were watching how long the Prime Minister could stay in power after vowing to stay on despite that historic election defeat over the weekend for the upper house majority. So we're now hearing from TBS as well that the Prime Minister will decide soon on the resignation, although Mainichi has given the date of the announcement for the resignation by the end of August. And of course, this will mean that whoever becomes Prime Minister next will still have a challenging task ahead. We have seen the ruling LDP and its coalition partner lose that majority. The LDP set to govern without a majority in both chambers for the first time since the party founding. And we have seen before the era of Prime Minister Shinzo Abe a revolving door of prime ministers that have lasted only by about a year. The compromise on tax policy is what we're watching because, of course, we have seen opposition parties that wanted to lower the sales tax actually do pretty well in the upper house election. But we have heard from the top trade negotiator Akazawa as well that the trade deal was a result of Prime Minister Ishiba's strong leadership. So perhaps this a good reason to go out on a high note for Prime Minister Ishiba.
You mentioned whoever's Prime Minister next and referred to the revolving door of Japanese Prime Ministers. I mean, are there any obvious candidates to replace Shigeru Ishiba?
Not at this point, because we have seen, of course, a fracture in Japanese politics very high, even coming to this upper house election. A lot of names have been talked about. What we know at this point from local media is that the Prime Minister is actually set to meet with heavyweights from the party, Taro Aso and Kishida as well today. So we'll be watching those developments. But what will be important for the Japanese public as well will be how this trade deal with the United States is really received, because we are now getting some details of what was announced, and we are hearing that it will be 15% tariff on goods across the board from Japan going into the United States. When it comes to car tariffs, that was the key concern because, of course, the auto sector makes up for 10% of Japan's GDP. It employs more than 5 million people, so it's very consequential for the Japanese economy. We're hearing from Akazawa that this will be 15% tariff on cars with the existing 2.5% rate included in that number. Still, we have no clarity on what happens with steel and aluminum tariffs, so we'll continue to watch for more details on what was agreed between Washington and Tokyo.
Yeah, in terms of this trade deal, I mean, it looks like a victory. Certainly the market is responding positively, but we must remember that a year ago these tariffs didn't exist at all, never mind 15%. Did Shigeru Ishiba perhaps face a tough sell to the Japanese electorate coming off the back of that weekend election defeat?
The thing is that when it comes to tariffs, especially put forth by the United States, is also very relative, right? When we saw the Philippine deal, for example, earlier today, we saw that the reduction of the threatened tariffs were to 19% from 20%. 15% is still lower than the 25% threatened on South Korea, lower than the initially planned 24% for Japan, which rose to 25%. So when it comes to tariffs relative to other countries, I think will be the key point that Prime Minister Ishiba and the government will try to sell to the broader public. So we will have to watch also what the implications are for rice. We have heard from local media that perhaps the ratio of rice imports from the United States could rise. That's, of course, a sensitive topic for the Japanese public, for the Japanese agricultural sector at a time when rice prices have gone up 60% from last year. But a key question right now is what happens after, of course, August and a new leadership perhaps comes forth here in Japan, and how the markets will receive that, because we have seen a lot of skepticism about Japanese government bonds given the fiscal concerns in this country and yields continuing to rise.
All right, Bloomberg's Sherry Ahn there in Tokyo. Well, joining us now for more on this is Tobias Harris, founder and principal at Japan Foresight. Tobias, obviously, immediately after that election, speculation began to swirl about how long Prime Minister Ishiba could hold on, and it appears not very long. Are you taken aback at all by the haste of this announcement, and what's going to happen next?
By the haste, no, not necessarily, because I think what we've seen, since Sunday night when the returns came in and it looked like the government was going to fall short of holding its majority, the calls within the LDP for him to go have been very insistent, very loud. Some of them have been more tacit than others, but it was clear that the party needs to turn a new page. That the feeling that the party is in crisis, that it needs to reconnect with voters, particularly its longtime supporters. That there's work to do, and that Ishiba is not up to the task. So I think the party is ready to move on from him. There's some ambiguity at the timeline, precisely when he's going to go, and when exactly he's going to say that he wants to go, and then what the timeline looks like for having a leadership election. But it's not going to be an easy leadership election for the LDP, because they have a lot of challenges that the next leader is going to have to overcome going forward for the next months.
Well, Shigeru Ishiba had to fend off a number of other candidates for the top job when he got it. Could you see any of those potentially re-emerging now to take over as Prime Minister? Because in terms of successes, there's not really any obvious ones.
No, I mean, and I think that's one of the challenges that Ishiba has dealt with over his year in office, that he really is the head of a party that is deeply divided, and his victory last year did not resolve the disputes within the party. I mean, you really have a pretty deep division between maybe what we might call the Abe loyalists on the right of the party, and Ishiba, who's surrounded by sort of reformists, more moderates, who want to keep the party as a big tent that represents more of the country. And that divide has not really been reconciled under his watch. And frankly, I think in a leadership election, you're going to see maybe a fight again between these two parts of the party with two very different visions, two different ideas of the direction the party should go. And there's maybe going to be an argument, particularly from the right-wing part of the party, that the biggest issue they've had in these last two elections, that a lot of the more right-wing supporters of the party have defected. I think there's a lot of reporting to that effect. And they're going to argue that you need to find a right-wing leader, someone who can bring back some of the policies and the approach of the late Abe Shinzo to try to bring back some of those voters, reconnect with right-wing supporters of the LDP, and really try to chart a direction forward along those lines. That's not necessarily going to be a uniformly popular approach. So there's going to be, I think, a pretty divisive battle again, and it really is something that might take an outright election defeat to really have turnover in the party that resolves this dispute. Because this is just a bitter fight that leadership contests really cannot settle.
Yeah, longevity as Japanese prime ministers, they're two words that don't really go together, right? Unless we're considering that the likes of Shinzo Abe, or a little bit further back in history, Junichiro Koizumi. Now, on the subject of Koizumi, it's worth pointing out that his son Shinjiro Koizumi sits in the cabinet. Is he a potential candidate?
I think he'll be in the mix, and I think after he was brought into the cabinet and rice prices started going down and he got good marks for the work he was doing, it certainly put him back in the mix in a way that it didn't seem like after his disappointing performance last year. I still think the mood might not favor him this time around. I think we do have to look at Takaichi Sanae, who was the runner-up last year, maybe Kobayashi Takayuki, another conservative candidate who ran last year. I think really the LDP has a few conflicting things it needs to achieve. It needs to to really reconnect with the broader public, try to regain the trust that it's lost over the last several years. It really needs to have a vision, particularly for the economy, because, of course, I think it got hammered on its handling of the economy and on inflation during this campaign that just ended. And it really needs to show, I think, generational change, because, of course, that was another area where I think you had these new parties that emerged that really connected to young voters and showed that we're fresh, we're new, we're a different voice. And the LDP, frankly, has been governed by people who've been around for a long time. And I think they really have struggled to show that they're able to connect to younger voters, to parts of the electorate that feel unrepresented. And as of now, that hasn't been the kind of leadership that you've gotten from the LDP. So these are sort of the challenges that I think they're going to have to struggle with and find and see if there's someone really who is at the sweet spot of all these issues. Oh, and by the way, also find someone who can be a competent statesman and sit across the table from Trump and really try to move beyond sort of the acrimonious trade disputes and get the relationship on a stronger footing. So it's going to be a tall order for whoever follows Ishiba.
Yeah, you don't make it sound easy, Tobias. All right, thanks so much for joining us. Tobias Harris there, founder and principal at Japan Foresight. Well, let's take a closer look at the market moves. After all of this news, Avril Hong joins us in a dramatic day in Tokyo. Avril.
Yeah, the twists and turns out of Japan today was really interesting to see how the yen was trading in a narrow range against the greenback, even amid news of all the trade deals. And it's reacting sharply, that weakness you're seeing against the US dollar following the news from local media that we could soon see a resignation from Prime Minister Ishiba. And even though the BOJ next week is not expected to rush into rate hikes, think about how it has been insistent that for it to move, it really wants to see the impact of tariffs. And now it has a trade deal. And now some could argue that the political uncertainty is sort of cleared out of the way as well. So we are seeing JGBs sort of pricing in for a rate hike. Swaps markets are pricing in at least 80% of one by the end of the year. And JGBs are really coming under pressure today. Now flip the board. I think the clear winner out of all this today has really been Japanese stocks, and they're fueled by the catch-up play we're seeing in automakers. Some of them today jumping by double digits, including Subaru as well as Mazda. And this could all help Japanese equities that have been trailing in terms of gains versus the broader indices in the region to play further catch up, including to the likes of the Kospi and the Hang Seng. Paul.
Oh, all right. Thanks very much, Avril. Well, still to come, we've got U.S. Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick going to be joining Bloomberg Surveillance. That's later on tonight if you're watching in Asia. Wednesday morning, U.S. time, on the times on your screen. Coming up more presently, though, the outlook for global trade as the Philippines and Japan become the latest countries to clinch deals with the United States. The Hinrich Foundation going to be joining us next with more on that. This is Bloomberg. Well, Japan is the latest nation, as we've been reporting, to secure a trade deal today, with the two nations, that's Japan and the US, agreeing to 15% tariffs. And this comes as other nations scramble to get their own agreements across the finish line before President Trump's August deadline. So for more on the tariff implications for Japan and other nations in Asia, let's get to our next guest. Jia Hui Tee is Senior Trade Policy Analyst at the Hinrich Foundation. Jia Hui, thanks so much for joining us today. I just wonder if you can start by giving us your thoughts on the significance of this Japan-US deal. Markets certainly responding very positively in Tokyo today.
Yeah, I mean, certainly this sounds like great news for Japan. They had a 25% previously announced, and now a 10% cut to a 15% tariff. And that includes the auto sector, which is great news for the automakers in Japan. And when compared to what the Philippines got, which is only a modest cut of 1%, and this definitely a much greater news than they can get. And furthermore, when you look at, there are still some concerns for the Japanese side, despite all this great news, and that comes from the steel sector, which still has a fairly high 50% that is looming. There's no certainty of whether the Japanese side would get a reprieve on such tariffs.
Yeah, let's talk a little bit more about the details of this. I mean, to your point, President Trump calling this, and I quote, a great deal for everybody. But, I mean, is it really? We've had some analysis from Bloomberg Intelligence that says Japanese exports to the U.S. could drop by up to 30% in the medium term, and it could mean a 0.6% hit to Japanese GDP as well. So is this really such a great deal for Japan?
I think you will have to look at what are the long-term economic consequences would be when it comes to for Japanese market. Let's say what would be the domestic prices, and what those tariffs would cause to Japan's exports to the U.S. We can see that in the previous rounds of tariffs, Japan automakers had to cut their prices by a really steep amount in order to secure their market share in the U.S.
In terms of some of the other details as well, there will be greater access for U.S. agriculture products, including rice, also U.S. autos into Japan. I do remember covering a story a few years ago. I got to visit a rice warehouse in Tokyo, and the manager showing me around pointed me to a huge pile of rice sitting in the corner. And when I asked about it, he said, well, that's come in from the U.S. and nobody wants to buy it. So it's one thing to bring rice and autos into Japan, but the Japanese consumers want to eat U.S. rice and drive U.S. cars.
This is certainly a good point to make. For the Japanese, I think they do have preferences for consuming local rice, and Japanese cars, of course, by design, are good for the Japanese roads that are usually smaller than those larger cars of the U.S. And certainly, when rice prices have increased to a certain amount that is really challenging for domestic consumption, I think Japanese will also begin to start to look at alternatives. And I think this opening of the rice market to the U.S. will certainly result in some domestic consequences for the domestic rice producers.
Well, you mentioned the deal with the Philippines as well a short time ago. That was also making news today. So the Philippines going to open its market to also U.S. cars, to import more soy and farmer products as well. President Marcos of the Philippines calling this a significant achievement. But same question, really. Is it an overall net positive for the Philippines economy and industry?
I think in terms of the amounts of concession that they actually had to give to the U.S. in return for such a modest cut, I think it is certainly a question that the Philippines will have to manage on the economic side. And I think for the rest of Asia, looking at the tariff deals that were previously concluded, for example, with Vietnam as well as Indonesia, tariff levels remain very much on par with what the Philippines got, 19%.
Well, we've also got a number of other ASEAN countries trying to negotiate deals before the deadline, including Malaysia, Thailand as well. What sort of leverage do these countries have when it comes to pushing for a reduced tariff?
In terms of their exports, I mean, for both the Thailand as well as the Malaysia, the U.S. remains a significant export market for those countries, especially for their electronic sector as well as autos. I think in terms of their economic size, there is fairly limited economic clout to what they can pull. So still, I think for these countries, they will have to look at what the the rest of ASEAN already got, and to really adjust their expectations accordingly and factoring that into their negotiation strategy.
Is it going to be a different story when we get to the really big one, which is a US-China deal? Because, of course, the US needs rare earths from China, and we've already seen an agreement struck on that. Do you see that China's got a bit more leverage here? And what are your expectations for the contours of that deal between the US and China?
Well, certainly China is the one of the largest economy after the US, and certainly with their rare earths control of over around refining rare earths capabilities of around 90%. I think it is a really big card that they can play in the negotiations. With that, I mean, there is already announcements from Basel that they are going to extend the deadline of the negotiations to go past August 12th. I think there seems to be a lot of challenges in trying to get a breakthrough from the previous negotiations.
When you consider the difficulties that have been created in global trade from trying to deal with the second Trump administration, do you see there's an opportunity here perhaps for more regional cooperation in Asia, and perhaps can you see a scenario where China achieves its long-held goal of joining the CPTPP?
Certainly, I think those tariff shocks imposed by Trump will certainly be a factor for accelerating all those trade talks and initiatives in ASEAN and across Asia. I think ASEAN particularly has quite active in forging FTAs and having negotiations with its trading partners ASEAN and China just recently upgraded its FTA earlier this year. And it also has a FTA negotiation with other countries that are also affected by Trump's tariffs, like Canada. And some of the ASEAN members are also negotiating with the EU. And I think going forward, there are also new opportunities for ASEAN to collaborate with other regions as well. I think Malaysia proposed that there is to have ASEAN GCC FTA, which is going to be explored under a feasibility study by ASEAN.
All right, Jia Hui Tee from the Henrich Foundation, thanks so much for joining us today with your views on all the trade deals that have been struck today and the ones that are coming up. Well, it's been a lot of action in Japan today, as we've been discussing, as if the trade pact between the US and Japan wasn't enough. We are now hearing those local media reports, as mentioned. You see on your screen there as well that, according to Manichi, Japanese Prime Minister Ishiba will announce his resignation by the end of August. And that's the sentiment of that report certainly being echoed by other media outlets as well. A lot of the reaction, though, to do with that trade deal of seeing the Nikkei popping pretty healthily, other indexes rising as well, and Japanese automakers performing very strongly. We've got Toyota up by more than 13%, Nissan up by almost 9%, although it must be said both those stocks are still lower on year. Subaru Corporation, meanwhile, better by almost 16%. Worth pointing out what's been happening in terms of Japanese bonds as well, because we do have that 40-year auction coming up very soon. We're watching that closely, but Japanese 2-year notes at the moment trading like next week's Bank of Japan meeting is a live one, so plenty happening in Japan at the moment. We'll dig into those shares of Japanese car makers next, powering ahead after securing that 15% tariff rate in a deal with President Trump. More on the outlook for the sector next. Welcome back. You're watching Insight. Well, Japanese markets are going to be coming back from their lunch break on an eventful day. Avril's here for another look. Avril.
Yeah, eventful indeed. We're getting news about this trade deal as well as possible resignation by Prime Minister Ishiba. And no wonder the JGBs are reacting, because that kind of could clear some of the uncertainties on tariffs on political front out of the way. Does this mean that the BOJ meeting next week is live? Certainly on the short end, JGBs appear to be pricing in a hike. We've seen swaps market also pricing in the 80% chance of a hike by the end of of the year. And on the long end, it's not like some of these stagflation worries have gone away. Indeed, even though there are some who think that the 40-year sale today might pass safely. We've seen how authorities have been taking pains to calm market concerns, including reducing issuance. What is key to watch is going to be the pool of buyers. We really need to see the life insurers, for example, play ball for it to be a sort of credible sale in Japan today. Now, flip the board, take a quick look as well at what we're seeing in Japanese stocks. We've seen how the automakers have been rallying really hard. It's worth noting the nuance about the ones that are outperforming in auto stocks are the ones that take more of the proportion of profits from North America, for example. And the rally among them is really helping the topics to outperform today. We're seeing it not far from the level we saw last July, which, as you recall, was just before the yen carry trade unwind, Paul.
All right, thanks very much, Avril. Well, we're seeing historic gains, as I mentioned, among Japanese automakers today after President Trump agreed to a 15% US tariff on cars imported from Japan. Now, that gives these companies some much-needed certainty and a degree of relief. They were bracing for a 25% levy on all cars and parts sold in the US. Let's get to Bloomberg's senior Japan economist, Taro Kimura. Taro, obviously, this reduced tariff, much better than it would have been, but let's not forget a year ago there was barely any tariff at all. So how sustainable are some of these gains that we're seeing?
Exactly. The announced agreement was sort of a positive surprise for the market. But don't forget, Japan has had little U.S. tariffs back in 2024, and now it has, on average, 16% because 50% are still in aluminum tariff still remains. So it's a huge, potential huge blow for exporters, and so it's mixed so far. The yen is still at the weak level. It appears providing some cushion for automakers and other exporters to keep their production line running and gain profits by exports to the U.S. But at the same time, their profits are also untempered by tariffs, obviously, because they are reducing the export prices in order not to hike prices for U.S. consumers. So therefore, we need to keep an eye on the hard data coming out going forward, and there's some jittery moment for real economy still goes on.
Yeah, and the auto industry, very important to Japan's economy more broadly. With a 15% tariff, what's the potential drag on Japan's growth? We roughly estimate, like in the medium to long term, like the Japan's hit to Japan's GDP is around 0.3%, which sounds small for you, but given the Japan's potential growth rate is usually estimated around 0.5 or 6%, I have to admit it's a big blow. So therefore, it depends on how the auto exported cars still hit the interest of U.S. consumers, and Japanese factory workers are being kept hired, and also kept their wages kept rising because inflations are surpassing. So there's a domestic momentum is probably stalling because of the stagflationary kind of shock because of the running inflation recently. So external fear should be closely being watched. Well, we've got a Bank of Japan meeting next week, and previously Governor Ueda said he wouldn't be doing anything until there was a trade deal with the US. Well, now there's a trade deal with the US. Short-dated bonds seem to be trading like next week's meeting is a live one. What can we anticipate?
Still, I expect the BOJ won't hike rates in the coming meeting on July 30 and 31 because, of course, as you said, the BOJ's rate hike signal hinges around the uncertainty around trade negotiation. But watching recent BOJ officials' communication carefully, they're also very cautious about potential fallout from U.S. tariffs regarding growth and inflation. So therefore, it will take at least a few or several months for the Bank of Japan to judge it's conducive to go ahead with increased rates, because they need to watch some hard data such as production, wages. But that said, in a broad picture, it's clear to my eye that Japan is now in inflation, and the direction for the Bank of Japan that it needs to still increase rates. That's still 0.5%, and considering the inflation that's running above 3% right now, it's subdued significantly negative in real terms. So therefore, the Bloomberg economics baseline is they will hike rates in October, where they update their price forecast based on the announced agreement between the U.S. and Japan.
Taro, just want to get across some breaking news here. We have been closely watching for the auction today of Japan's ultra-long 40-year bond. So we've just had the result of that, selling the bid cover ratio there 2.13. That compares with the 12-month average of 2.48. So that 40-year bond sale, the weakest demand ratio that we've seen since 2011. I know we've just got that news, but can you give us your quick analysis of it?
Of course, there's also a previous breaking news that the Ishiba is probably stepping down in August, or he will announce it in August. And given that Ishiba basically concerns about fiscal soundness and he wants to protect consumption tax, any other potential next leader is likely to be more fiscally expansionary. And also, you need to consider a unique factor for Japan's long yields market, which is the Bank of Japan is reducing the bond JGB purchases. So therefore, I totally understand the jittery moment continues for the bond market and auctions.
All right, senior Japan economist at Bloomberg Economics, Taro Kimura. Well, Bloomberg's executive editor for Asia markets, Paul Dobson, joins us now from Singapore. Paul, just want to start off with some of the action that we've seen in Japan. A number of asset classes being affected today. I mean, we've got equity markets performing very strongly, particularly those automakers, and then that 40-year bond sale, well, really exceeding some of the worst predictions. What are the key takeaways for you today?
Yeah, pretty explosive day in Japan's markets. All round, started off by the trade deal, of course, which has seen those stocks blast higher. And then the news, as we were just hearing, the potentially Ishiba will be looking to resign his post quite quickly. The risk there from a market's perspective is that any of the competing sort of voices who would like to have influence on the government would most likely push for looser fiscal policy. That means more stimulus spending, essentially, either through tax cuts or through handouts, those kinds of things. That might be good news for the equities market and help stocks continue to rally, but it's not good for the bond market, where people are worried about the government spending discipline already. And that, I think, is why you see demand very low for these auctions of the very long maturity bonds. They're not yet offering enough compensation for those risks. And therefore, people aren't really showing up in their droves. So that weakness in the Japanese government bond market may continue. The one hope is, and not all that good either, but if the BOJ does move quicker to hiking interest rates, then it should at least keep inflation under control. So that might help to put a lid on those longer-term yields, admittedly, at the same time, pushing up the short-term borrowing costs too.
Yeah, I just also want to get to a story that's been somewhat buried by the news flow coming out of Japan at the moment, and that's what we're seeing in Hong Kong. The Hang Seng China Enterprises Index, better known by its acronym HSCEI, having a terrific day. I was heading for the highest close that we've seen in some years. Can you unpack this for us? What's driving the enthusiasm here?
Yeah, well, I think that there's a combination of factors. The general backdrop is pretty risk supportive at the moment. Global equities are at record highs. US equities are at record highs because these trade deals are starting to get done and the market is starting to get a little bit more certainty. China, as we know, is in this negotiation process. It seems like Besant is going to meet with some Chinese counterparts in Stockholm quite soon, but extending the negotiation window as well. So China's sort of comfortable with the tariff situation at the moment. Meanwhile, you've got more signs that there's a little bit more support coming through for China in terms of fiscal and economic policy. You've got, on the one hand, these efforts by the government to sort of stop the really cutthroat price competition in the mainland, which is lifting the outlook. And then you've got some of these longer-term stimulus plans in terms of infrastructure, particularly the massive hydroelectric dam they're planning to build in the far west of the country. That's really helping to sort of change the mood a little bit and get people more optimistic about the prospects for construction companies and the like, for commodities and for the labour force, and therefore for the economy as well. So signs of optimism there that have been building for a while in the Chinese market, starting to really show out now.
All right, Bloomberg's executive editor for Asia Markets there, Paul Dobson. Well, joining us now is Janet Rilling, Senior Portfolio Manager at Allspring Global Investments. Janet, plenty to talk about today, not the least of which some of this news flow coming out of Japan. And being involved in fixed income credit, I just wonder if I can get your reaction to that 40-year auction that we just saw in Japan, the weakest demand ratio we've seen since 2011. At what point do some of these longer dated notes in Japan see yields that are too attractive to ignore?
Well, I think there is a specific element to Japan, but there's also a common element globally. And that is there's a lot of long duration bonds for sale because many governments have a fiscal situation where they need to finance a deficit. So the expectation of the bond market is there's going to be continued supply in the long end, and there are more limited buyers out there. So I think the specific auction today underscored that limited demand, but maybe more specifically to the situation in Japan, concerns about the high debt to GDP ratio and the increasing fiscal concerns is really weighing on that auction.
Yes, and there's been some interesting action at the short end in Japan today as well, following this trade deal that we've seen agreed between the US and Japan. Seen some big moves in two-year JGB yields as well. Seem to be behaving like next week's BOJ meeting could be a live one. What are your thoughts on that?
Yeah, I would tend to think they're going to wait to see how some of this filters through the economy. I mean, certainly it's good to have a concrete number in terms of tariffs. The question is, how will that be absorbed between the manufacturers like the autos compared to the consumer? So my expectation is they would wait to see some of the data come through post-implementation of these tariffs.
Yeah, and what's your reading of the inflation picture in Japan at the moment? Because the numbers look pretty hot, and then at the same time we've just been hearing from our reporters about the potential drag on growth from this trade deal because, you know, there are tariffs now in place against the auto sector that were not there 12 months ago. So are you concerned about the balance between inflation and growth in Japan at the moment?
I think that is a difficult balance. I mean, with the potential for increased costs related to the tariffs, that is an upward force. At the same time, the tariffs could be somewhat of a drag to economic activity. This is a common situation globally. I mean, the U.S. is in a similar position where the push and pull between higher inflation and lower growth is putting some boundaries around yields.
Yeah, let's turn to the situation in the US as well. I know that you view there is a risk of re-acceleration of inflation in the United States. Can you tell us a little bit more about that view?
When we look at the overall U.S. macro picture, we're quite constructive. But the one element that does raise concern is the potential for inflation to re-accelerate. We've generally had more benign inflation figures this year, with the exception of the last CPI print, which showed a bit of acceleration and maybe some evidence of the tariff concerns coming into consumer prices. So inflation is something we're watching closely. It's not our base case that it's going to become unanchored, but we do see it as one of the higher risk elements in the macro outlook for the second half of 2025.
Yeah, that's certainly a view that you share with those data-dependent members of the Fed, which, much to the frustration of President Trump, are refusing to cut rates. And we do have a Fed meeting next week as well. So what are your thoughts on what we might see there? Because many in the market still see 2 cuts in 2025, but with only 3 meetings left after this one, is time running out?
Well, we don't expect any moves this meeting, as I think the Fed wants to see a few more inflation prints and employment prints prior to moving. But it is our expectation that they will look to cut rates later this year. They've communicated a dovish bias. They have described the current rate as restrictive, and they want to move it closer to neutral. Given the employment picture being pretty balanced and our base case that inflation will not become unanchored, we do think the most likely course of action will be for 2 cuts later this year.
Yeah, also questions continuing to swirl about the Fed, the independence of the Fed, the pressure that's being put on Chair Jay Powell. President Trump undercut Chairman Powell again today. Let's just have a listen to what he had to say.
Terrible head of the Fed. And if he brought down interest, you know, in Europe, the European Union, they've lowered their interest rate now 11 times. And we haven't lowered ours at all. He's not doing a good job, but he's only going to be there for a short while, not going to be there much longer.
Well, let's run a little thought experiment, Janet. Suppose Jay Powell did cave in and suddenly start lowering interest rates. What, in your view, would be the impact on the U.S. economy?
Well, again, it is our base case that later this year the Fed will lower rates. Now, let's remember that it's not just one member of the committee making that decision, right? There's a number of individuals that vote. Jay Powell is the leader of the group, but not the only voice. But nonetheless, it is our expectation for a cut in rates. We think the market is largely expecting that, so we wouldn't expect a large reaction if that came to fruition.
If that came to fruition sooner rather than later, is there a risk in moving too early?
I think the market would be surprised if there was a cut in the July meeting, and I think there would be a reaction. Is there a risk of moving too early? Certainly. If the Fed was to cut rates and thereafter we saw an uptick in inflation and one that was larger, the increase could be viewed as a policy mistake if it stoked inflation and caused it to spike higher.
Well, certainly the criticism of Jay Powell from President Trump's nothing new. We've been hearing it for years now. But he is, of course, an appointee of President Trump. Is there any reason to think that the next Fed chair appointed by President Trump wouldn't also act independently?
We've heard from some of the individuals who've been considered candidates for the Fed, and they have reiterated the importance of independence. Certainly, most economists, if not all economists, believe in the importance of the independence, as do financial markets. So I think there is a strong pull to keep the Fed as an independent function in the U.S.
What's your outlook for the United States dollar against this backdrop as well? Is further weakness in your base case?
We've been diversifying a little bit away from the dollar in a modest degree, as we think that having some diversified currency exposure in a portfolio makes sense at this point.
I just want to ask you about China as well, because there's some discussion that we might be getting near the end of the deflationary cycle there. Was that something you would agree with, and what are the implications for yields?
Yeah, the deflation from China certainly has had an impact as it gets exported through the various sales channels. However, the tariff situation will also weigh in terms of the inflation picture there, and we will see higher costs being passed to the U.S. as we source our goods from China.
So just before we let you go, Janet, I'm wondering if you can tell us about where you're seeing the best opportunities in fixed income right now.
So generally, we're quite constructive on fixed income because yield levels are attractive as compared to historical levels this cycle. So we are favoring high-quality income in our portfolio. To us, that means looking to places like structured product to overweight in the portfolio. This tends to be a very high-quality portion of the market with attractive yields. It includes agency mortgage-backed securities. There's a very diversified sector within the asset-backed security sector, commercial mortgage-backed securities. Those are most definitely our favored areas of the fixed income market.
All right, Janet Rilling, Senior Portfolio Manager at Allspring Global Investments. Thanks so much for joining us today. Let's take a quick look at Indian markets before we head to the break. We did have those markets open a short time ago, but very much buried under the news flow coming out of Japan, as mentioned. But much like the rest of the region, seeing a modestly risk-on day there. We've got the Sensex better by about 1/3 of 1%. Just some very modest gains for the Nifty Bank Index, and the rupee still hovering near those record lows. More in a moment. This is Bloomberg. It's been a big day for trade stories. Here's some more that we've been following. Thailand says it's close to a deal with the US to lower a threatened 36% tariff rate before the August 1st deadline. The Thai finance minister says talks should conclude within days, and he expects a reduction in line with their Southeast Asian neighbours. Thailand has offered to increase purchases of US goods and expand zero tariffs on American imports. The Trump administration says its trade deal with Indonesia will unlock $50 billion in market access. An official tells Bloomberg that Jakarta will eliminate all non-tariff measures on US goods and drop barriers that could have hit American tech companies. President Trump announced the deal for a 19% tariff rate last week, but we're told it will only be implemented in the coming weeks. All right, let's get to Japan, which has been the epicenter of all the market action today. So much news flow. We'll start with that US-Japan trade deal. 15% tariff on Japanese autos to the US. That's really put a rocket under some of those big Japan auto names. We're seeing the Nikkei more broadly up by about 3.25% at the moment. Down the bottom of your screen, as if that wasn't enough, Japanese Prime Minister Shigeru Ishiba set to announce his resignation by the end of August. That's from reporting by Mainichi. We're also hearing the same from Yomiuri now. So it looks like, as predicted, following that very disappointing results in the election, that the Japanese Prime Minister is going to step down. Meanwhile, the 40-year government bond auction, which we were watching very closely as well, that saw its weakest demand since 2011 amid concerns over government spending even after the US and Japan reached a trade deal. Bid cover ratio pretty miserable there for that 40-year auction. All right, big names coming up on Bloomberg TV as well. US Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick are going to be joining Bloomberg Surveillance later on tonight if you're watching in Asia. That's Wednesday morning in the US at the times on your screen. Well, that is it for Insight. Horizons Middle East and Africa is up next. This is Bloomberg.